I think about the economy that the president inherited and so many challenges, how we got unemployment down, how we got people back to work. And yes, prices went up, but we have seen prices come down by about 60%. And certainly good news today with the flat increase in prices overall. So this has certainly been giving, as the president likes to say, families a little bit more breathing room, and is good news for American families. And of course, good news for American workers today, as we saw yet another month of wages outpacing inflation. That marks 15 months for the 80% of the workforce that are production and non-supervisory employees, where their wages have been outpacing inflation. So that's great news for workers and their families.
Well, Heather, even as we talk about a flat figure on the headline, there still is a bit more happening beneath the surface that shows some stickiness in certain areas, including shelter prices. Up 0.4%, owner's equivalent rent, similar. How can that realistically be addressed at this point when there are arguments being made, including by members of the Democratic Party like Senator Elizabeth Warren, that this is something that high interest rates are actually exacerbating because it costs more to borrow to buy a house? How can you be confident, as long as rates remain high, that the shelter price pressures are going to come down?
Well, let me give you two answers to that question. First, a technical one, and then a policy one. So first, CA, the Council of Economic Advisors, we've been tracking this for quite some time. The way that shelter is accounted for, you build in rents from leases that were signed a while ago. So you have a good sense when you look at real-time data how this might shift over time. We have been estimating that these numbers will come down as the prices of new leases come down. And certainly that's what we've been seeing in general. Now, granted, we certainly want those to come down more, but that's taking up a larger share of the monthly increase in price changes. On the second point, though, in terms of policy, the president has been acutely aware of the challenges in housing. He has put together a comprehensive housing supply plan, and that would do a number of things. One thing that I just would like to point out is that plan includes giving new home buyers a tax credit to make it just that much more affordable, which can help ease the burden of those higher interest rates during these times so that people can get into those new homes.
Heather, at what point do higher interest rates in and themselves become inflationary, or are we already there?
Well, listen, we have been in this situation for quite a while now, and the expectations of where interest rates have been baked into, forecasts and where people are thinking about the economy. And certainly this is challenging for folks making those big purchases or things like that. But we remain optimistic that because of the success in the economy, and, critically, we've made so much progress, and that very quick progress in the beginning, but we have seen, things like the gains in jobs and output, that we're starting to see those get down to that kind of pace that is sustainable. And so that's what we're looking for. And, here today, we're here to talk about the fact that, we have these numbers on inflation that beat expectations on the low side. That certainly it's ongoing good news and means that we're going to get that extra bit of breathing room in the economy to continue.
Well, as we think about the strength of the economy that you're characterizing and, say, the labor market specifically, we have seen a lot more analysis of the way in which migrants have contributed to that. The idea that they are actually playing a very key role in the strong job growth figures we continue to see every single month. But President Biden just signed an executive order essentially cracking down on those seeking asylum. Heather, how quickly do you expect that might actually show up in the data? What economic impact could it have?
So the president does not expect this to have negative implications on the economy. Certainly we have seen that, immigrants are an important part of our labor market. They add to the economy. They go out there and get those jobs and in all the different ways then add to the economy as they're buying things. But we also know that the economy is very strong right now in terms of the labor market, and we've seen an unemployment rate at or below 4% for over 2.5 years now, and so that certainly is an indication of the strength that there are a sufficient number of jobs out there for anybody who wants to go out and try to find something. That continues to be a strong labor market, even though we've had this immigration.
We're spending time with Heather Boushey live from the White House as we prepare for our special Fed coverage here on Bloomberg TV and radio. There's a big debate about to begin, Heather. We were discussing it before you joined us about potentially making the Trump-era tax cuts permanent. There's a big drive among Republicans to make that happen. And as we consider the potential impact of greater deficits on inflation, I wonder what you would see happening to our economy if that took place. These are set to expire next year. What would happen if they were made permanent?
Well, listen, here's the thing. We know that the kinds of policies that the prior administration put forward were supposed to lead to a ramp up in investment and productivity and, particularly in manufacturing jobs across the country, and that's not what we saw. In fact, President Biden's agenda has led to that kind of sharp uptick in investment, and not doing it through the massive tax cuts that were, not good for the economy, but actually doing it through, smart, targeted policy that has led to real economic outcomes in communities all across the place. So as we're looking at this conversation about what should and should not expire, the president's been very clear. He continues to believe that no one making under $400,000 a year should see their taxes go up, but he also knows that we should not be just having giveaways for American businesses that are not tied to investment and growth and the kinds of things that really matter to our economy. So that, I think, is where the important real contrast is between that Tax Cuts and Jobs Act that only starved the government of the resources that it needed, and the president's proposals that have been put forward in a way that is helped to lower the deficit, but is also making those at the top pay their fair share.